Business Point on Global Television.
The business world can be dynamic and unpredictable, with headwinds and volatility sometimes becoming an obstacle for players in the business and economy landscape. Watch Business Point on Global Television as Samuel Odi walks you through the twists, turns and curves in bands, stocks and crucial market indices from a global standpoint. Watch Business Point weekdays on Global Television at 11 a.m. West African time. Business Point, this is business.
Business Point on Global Television.
The business world can be dynamic and unpredictable, with headwinds and volatility sometimes becoming an obstacle for players in the business and economy landscape. Watch Business Point on Global Television as Samuel Odi walks you through the twists, turns and curves in bands, stocks and crucial market indices from a global standpoint. Watch Business Point weekdays on Global Television at 11 a.m. West African time. Business Point, this is business.
Business Point on Global Television.
The business world can be dynamic and unpredictable, with headwinds and volatility sometimes becoming an obstacle for players in the business and economy landscape. Watch Business Point on Global Television as Samuel Odi walks you through the twists, turns and curves in bands, stocks and crucial market indices from a global standpoint. Watch Business Point weekdays on Global Television at 11 a.m. West African time. Business Point, this is business.
Hello everyone and welcome to the program Business Point on Global Television. I am Samuel Odi. Many thanks for joining, and we sincerely apologize for starting a little bit behind schedule. On today's edition of Business Point, we'll be extracting the 2.0 and then of the return rather of Donald Trump into the White House, and then what it means to Nigerian economy. One, from his speech, acceptance speech, as I yesterday, he made mention of the fact that he's going to restore global economy. And then we, from this angle and from this part of the world, will be looking at what his presidency would be, how it's going to impact Nigeria and then the Nigerian economy that is on the developing stage, given the fact that Nigeria and the United States of America have been long-time partners rather, and they tend to do a whole lot of businesses together. looking at the fact that President Trump's policy is based on exchange rates, interest rates, inflation, immigration, geopolitical, and aid implications. But we, on today's edition of Business Points, will be focusing more on the exchange rate, interest rate, as well as also inflation. So we'll be looking at those angles. But we have someone who hopefully will join us in the course of the program to help us talk about this major talking points. But before we get into those angles, let me bring you up to speed with what actually going on. Donald Trump's return to the White House as the 47th President of the United States of America following a dramatic victory over Kamala Harris brings new questions for Nigerians' economic outlook. Trump's economic policies are built around America first. It prioritized domestic energy production, tariffs on imports, and pushing for low interest rates. These policies could have a significant impact on Nigeria's economy, particularly in areas of exchange rate, capital flow, inflation, and immigration. So below, maybe we'll just have a few keynotes that we need to take away that has to do with Nigeria's economic landscape. The major key takeaways or key points to look out for with Donald Trump's second term could have sweeping implications for Nigerians' economy: a stronger dollar potential, capital flow from the U.S., and low global oil price may add to Nigerians' exchange rate volatility, putting pressure on the naira and increasing the inflation. Immigration restrictions could reduce remittance flow, while geopolitical shifts might reduce U.S. support for Nigerian security and development. This is another angle of a very, very big concern, because they just concluded International Monetary Fund meeting that was held in DC. The CBN governor and the coordinating minister, Wale Edun, made mentions of the fact that Nigeria is looking to have a monthly remittance of about $1 billion on a monthly basis. So with Donald Trump coming in, and who is someone that is more on restrictions and remittance, so the fact that we have all of these angles now, it might temper with the current plans for Nigeria to be able to have a monthly remittance. Yes, many thanks for staying. We sincerely apologize for that quick break. So still making mentions about how Donald Trump's second term in office is going to impact Nigerian economic development. A stronger dollar generally makes it more expensive for emerging economies like Nigeria to acquire foreign exchange, potentially straining the Central Bank of Nigeria's effort to stabilize the naira. Nigeria's naira has depreciated by over 45% this year alone, and an appreciation of the dollar could further weaken the naira, impacting import costs, inflation, and also purchasing power. A stronger dollar also increased Nigerians' debt servicing costs, as many Nigerians' obligations are dollar-dominated, giving Nigerians resilience on imports for fuel, raw materials, and consumer goods. Additionally, dollar strengthens could heighten the inflationary pressure on already high cost of living. Interest rates and capital flow into Nigerian historical. Trump has favored a low interest rate environment, pushing the Federal Reserve to maintain a loose monetary policy even during period of economic growth. During Trump's initial presidency, the Federal Reserve of Nigeria raised interest rates, breaking at 2.5% in 2018 before cutting them near zero by March 2022. Concentrate the economic effects of the COVID-19. Trump's renewed pressure for lower interest rate could again influence the Federal Reserve's policies directions. If the Federal Reserve keeps the rate low, this could in theory result in capital outflow from the US as investors seek higher returns in emerging markets. However, if dollar strength persists and other global markets remain volatile, investors segment may still favor the US assets as a haven. From 2016 to 2020, Nigeria attracted approximately around 58.1 billion US dollar in the capital importation, with 2019 seeing the highest inflow at 23 billion US dollars. This was in part due to Nigerians offering high-yielding instruments like government bonds and attracted foreign investors, including the 4.69 billion US dollars from the US source in the year. Should Trump's policies create a continued low-yield environment in the USA, but now Nigerians once again could attract base capital looking forward to higher returns, particularly if Nigeria remain attractive. If Nigeria maintains its attractive interest rate on its debit instruments, this capital inflow could help alternative Nigerians for foreign exchange pressure and support Naira stability. Now let's look at what Donald Trump's plan is in terms of inflation and policy is in terms of inflation and Trump's energy. Trump's focus on reducing US energy costs by increasing domestic oil production and drilling on federal lands could mean sustained low global oil prices. In his first term, Trump's policies and COVID-19 pandemic led to WTI crude oil price falling sharply to around 39.17 barrel in 2020 compared to 65.20 dollar in the per barrel in the year of 2018, as Nigeria heavily relies on oil exports for government revenue and foreign exchange. Prolonged low oil price could impact budget stability and government spending, with knock-on effects on inflation and economic growth. Furthermore, Trump's proposed tariff on imports, including a 60% tariff on Chinese goods, could raise inflation within the US, which might trickle down to Nigeria by increasing the cost of imported goods and components. Since the US is among Nigeria's top trading partners with over 2.2 trillion in imports and 2.8 trillion in exports in the first half of 2024, a US-led price increase could influence Nigeria's inflation through costlier imports of essential goods like machinery, pharmaceuticals, and agricultural products. Trade policies and Nigerian exports to US by Trump and by Trump's policy, which says Buy America, policies have often focused on reducing imports and increasing tariffs, which could impact Nigeria's trade relationship with US. In the first half of 2024, Nigeria recorded a trade surplus with the US, with amount of imports at 1.9 trillion and exports at 3.1 trillion. If Trump's tariff policy discourages the US imports from Nigeria, this could negatively affect Nigerians' export earning, particularly for sectors like oil, minerals, and agricultural products. A decrease in export to the Nigerian US from Nigeria to US might impact Nigeria's current account balance, further complicating its exchange rate. So This is all what we're going to be looking at. This is what may happen if most of those policies by Donald Trump don't get to pass, if those bills get to be passed. And then this is what Nigerians are expected to see and witness. But with all of these, we're hoping that there would be a slight bullish run for the Nigerian stock market. But we'll be going on a quick break, and then when we return back, we'll just dive into what the top gainers of Nigeria, and then get you the market cap of the all share index of Nigerian markets. Please do stay with us. Yes, many thanks for staying with us. So let's just bring you updates with the market wrap up from the previous market day, where we have top gainers as Nigerian all share index shared. Though yesterday, before I bring you update of the wrap up, yesterday sadly the market suffered a bearish run where 556.37 points were faced with a whole lot of decline, and then it didn't really close very well because the markets yesterday had a whole lot of bearish run. And then this is to the fact that as at Monday, yes, Nigerian all share index lost about 1.22 trillion naira because investors pulled out, given the fact that the Nigerian naira is not stable and it keeps fluctuating. So a whole lot of investors pulled out, and within days, Nigeria lost around, the stock all share index lost around 1.22 trillion. So moving up to fast forward to the close of business yesterday, the shared all index shared around 556.37 points, led decliners, and the Nigerian all share index ended on a bearish note, retreating by 556.37 points to close at 96,567.27 points. This marks a reversal from the previous day's bullish close, underscoring a 0.57% decline driven by subdued market activities. The index downward trajectory was accompanied by a 22.63% drop in trading volume to 418 million shares across 9,021 deals, down from 540 million shares the previous day, bringing the market's capitalization to a 58.5 trillion naira. In the day's performance, highlights emerged as the top gainers, rallying by the impressive 9.8%, and while Redgirl and Vented followed suit, advancing by 9.30% and a 9.17% respectively. Closely, and the chart was dominated by UBA Oando, which shared around 9.99% and 98% rather, respectively, singularly note sell-offs. So the total market recap as of yesterday was around the current all share index is around 96,567 points, and previously was 97,123 points, and the day change was at minus 0.557%. Year-to-date performance was at plus 29.15%, and the volume traded as at yesterday was at 418 million shares, and the deals that were sold and they were dealt on totally was around 9,021. And sadly, this is how much time will permit us to bring to you on today's edition of Business Point. So like I always say, if you have what it takes to run with the bull, go ahead. If not, you just stay low with the bear. My name is Samuel Odi. I'll see you again tomorrow. Bye for now.